You know this man. His name is Eddie Ghabour, and he has been right so far on the stock market. I think we're in an inflationary spiral, Eddie, and this new JOLTS report, 11 million job openings, I think it makes inflation worse. What say you?
Absolutely, Stuart. And look, this is why we continue to be bearish, even though a lot of people that will continue to say to buy the dip. But look, when you look at the backdrop, this is one of the toughest environments for small businesses. I talk to small businesses every week, and many of them are just hoping to break even. Some know they're going to lose money because that's what they have to do just to hold on to their employees. So you are seeing an economy that is decelerating at a historically fast rate, one of the fastest in history. And it's also happening around the globe. So we are heading, in my opinion, for a potential global recession. I think it's going to happen in Europe. I think it's going to happen here in the U.S. And those that are not positioned for it, I think are going to be very, very surprised with how much lower risk assets can go. So we are waving the caution flag here once again with the VIX and the 20 to lighten up on the risk.
Now, you've said frequently on this program in the last couple of months that stocks could go down another 20% from where they are now, down another 20% if what happens? Repeat, if what happens?
If we go into a recession, I believe the S&P has to be down at least 30%. So that's 20% more from where we are right here today. And I think that's a very realistic thing to expect from an investor. But these bear market bounces give people hope. Hope is not an investment philosophy. Focus on the numbers. The data that comes in continues to deteriorate week after week. And I think the next shoe to drop is going to be these second quarter earnings that we've been warning people about. You're going to start to see companies revise down. And that's going to be something that I think surprises the market. It shouldn't, in our opinion, but it's going to because people continue to buy these dips, and it continues to be the wrong thing to do right now.
I've got the yield on the 10-year Treasury at 2.9% right now. You think it's going to 2% even by the end of the year. If that were to happen, what would it tell you about the economy?
So that's going to tell us that the economy is going into a recession. Look, the bond market is smarter than the stock market, in my opinion. The bond market has got it right. We actually bought some long-term treasuries yesterday. We plan to buy 2 more purchases because we think it still maybe hit 3% before it starts going down. But this economic data, as it gets weaker, you're going to see the 10-year note, in our opinion, see that and leave the market and go down. So I believe that treasuries are a wonderful way to diversify and actually have some nice upside in the coming months.
You got that from me, Eddie Ghabour. I've been saying for a couple of months now, what's wrong with a 2-year Treasury? Hold it to maturity, take your 2% yield, and you're dead safe. You were listening to me.
That's right. And look, here's the other thing, too, that investors need to understand. It's okay to not be fully invested. I don't know why people don't have the patience to just sit on some cash. There are times in history when it pays huge dividends to be patient and hold some cash. And that's when you're going into a major recession. And that's what we're heading for, in my opinion. So be patient here. Right. Don't get sucked into these rallies.
Okay, we're just having a little problem with the audio there, Eddie, but we caught the gist of what you've got to say. Believe me, we hear and we understand. Eddie Ghabour, we'll see you again soon. I do hope. Thanks, Eddie.